This is CC. Welcome to the Orbit. It is Thursday, March 7th. We've got stocks higher by about 0.6%. We're looking at SPX at about 51.35. We've been as high as about 51.40 this morning. We are about 20 minutes into the trading day. The last couple of days, we bottomed here the other day at around 50.50, and we went up, gapped higher yesterday, traded some choppiness yesterday intraday with some actual volatility when we had another bank on the radar that had to go out and raise, regional bank had to go raise $8 billion. They have some depositors leaving. It's sort of a reminder of what went down last year with some of the regional banks. Going to a 1 week view on SPX, you get a better sense of that. And then we've talked about this on the Orbit a couple of days ago, which is this pattern we're seeing from week to week. We've got this channel that has taken us higher through most of the last 3 months. And one of the patterns you've seen intra-week and week to week is that, Monday and Tuesday can be a little rough, like pretty volatile. At some point, the market has turned around. And then we've generally finished Fridays very strong on the highs. Now, this is a unique one in that we've got the non-farm payrolls, the jobs number tomorrow morning. So options will be pricing a little bit of volatility. Let's go to the 2-day view here. So today we've got about just under a 0.4% expected move for the rest of the day. Tomorrow we've got about a 0.75% expected move, which is significant because that was about 1% or a little bit more than 1% coming into the entire week. So the remainder of the expected move and the volatility for the week still remains, and it goes into tomorrow morning and what kind of market reaction we would get. So for levels for today, we are looking right now at about 51.20 on the downside and about 51.60 on the upside. And then tomorrow into the NFP, and this is with the market right here at 51.40, we are looking at about 51.80 and 51.00. And you can see where that would be on this channel, going up to that 51.80. Let's just look at where 5200 would be on this chart so you get a sense. So that is the setup for tomorrow's jobs number. And then intraday today, let's just go look at some risk reward. Well, let's go just tomorrow and a risk reward of an iron condor. 5100 strike to the downside and the 5175 strike to the upside, and we're looking at it's almost 50-50 risk reward. It's about 225, 275. So risking a little bit more to make a little bit less. If you took that a little bit wider and you got yourself down, let's say about 50.85 on the downside and 51.90 on the upside, you're looking at risking about 350 to make 150, and then going all the way up to that 5200 level, really creating a lot of space. You've got risking about 400 to make 100. Your spot on the downside is 50.75, and you can see that break even about $1 below that at 50.74. And of course, we're looking at the condor on both sides. A lot of traders like to do just one side, maybe follow the trend, selling credit put spreads, look to fade maybe too big a move higher by selling credit call spreads, and then looking to leg in and leg out of both sides of this and kind of trade that channel.